Hey guys, what's going on? Carlos, CEO of G.A.R Capital here. Hope everyone's having a great night. It is, what day is it? Thursday, March 12th, 2020. Oh my God, 2020. I almost forgot the damn date. Turn on some lights and we can get started. And talk about this market, how everyone's freaking out, right? Okay. I'll go ahead and speak a little bit about what's going on. I feel like we've had this conversation before. But obviously, it's getting serious. Obviously. First thing we're going to do here is talk about the charts. Okay, let's rock this thing. A couple of levels I want you to look at moving forward. And a couple of things that we talked about. So, no, we're not all going to die. So hold on. Okay, I'm going to go ahead and bring up our favorite chart, E-mini futures. Yes, I know, E-mini futures. So I'm going to go and bring up a 3-week chart because, well, that's the best way to see it. All right, 3-week chart. We are now trading at 24.41. We are now in the cusp. Not in the cusp. We are in a recession, guys. We're officially in a recession. I know the recession basically means, unofficially, 2 consecutive quarters of GDP decline. We will get there. That's not even a question. We will get there. So what is the level? Why am I saying this? Why is the bull market over? Well, the biggest support that we've had has been this 200-day moving average on the weekly chart. We bounced off it right off here on the 2018 lows. And if I actually bring it out a little more, which I don't have the ability to, you could see that was support since the financial crisis, even before there. So we're not officially in a recession officially because we don't have those GDP numbers yet, but we're going to get there. I think that's a pretty much foregone conclusion. So, off comment, please. Don't see the graphic. Well, I hope you can see here. Anyways, 200-day moving average, right here. It's right at 26.38. We sliced through that. We're now 200 points off that and going down. Next levels to look for, right? 23.16 is the next stop below. Where do I think we're gonna go? Well, let me go ahead and break this down to you guys. You cannot hear me? Sound is on. Can you guys hear me now? My hand's on the mic. My hand's on the phone. Can you hear me now? Can you hear me now? Okay, can you hear me now? Can you hear me now? Now we're good. Great. Excellent. Can you guys see the screen? Oh, let me see. Can you guys see the screen? Technical difficulties as always. Fun. Great. We can see now. Okay, great. Okay, S&P 500. E-mini futures, as always. You know, my favorite. Okay, 200-day moving average has been that level of support. If I bring up, what do you call this? What is this? What is it? What am I looking for here? Let's go and bring up Trading View. My favorite is Trading View. Okay, so first thing I'm going to bring up is SPX, S&P 500. Again, I'm just going to go by charts for the most part, since it makes life a lot easier. Okay, we're going to go ahead and range it out a month chart, right? Well, this chart is not the same the way I like it. Either way, I don't have the 200-day moving average here, so I'd have to bring it up. So give me a second. I can still hear you. I can still see you. Let me go ahead and bring it up because Trading View sucks sometimes. So bear with me. Stand by, everybody. Stand by. Don't freak out on me. Bring up SPX so I can bring the full chart. Yeah. And it's giving me 2 things. I just want 1. Ah, yes. Okay. We'll bring up the 1-month chart and then we can honestly see what we're doing. Perfect. Yes. This is S&P 500 in a 1-month chart. We're all the way down to a 1989. Okay. I believe the 200-day moving average is right around here, which is the white line. And you can see that white line has been basically, for the most part, supported for the most part in SPX. But E-mini futures has been staying there. So anyways, looking back here, in 2008, we had a fall, as you know, from the top to the bottom, what we call a drawdown. That's about a 56% drawdown. If we do a 56% drawdown from top to bottom, we're gonna get to 1,800. My next level to buy, I have not bought any stocks this week other than trading puts, is 2,200, which is the lows of 2018 December. 2,200 is that level. So once we get there and we break that, the next level I would say would be throw the kitchen table. This is where you want to buy, recession speaking and everything with drawdown is right at 1,800. That's where I'd be at. So my first level is 2,200. If we can hold that, then that should be a good clear signal to start buying some stocks, nibbling here and there. If not, 1,800 is the next level. So I want you to keep that in mind. 2,200 and 1,800. Do not buy any stocks until we hit 2,200 because we are going to hit 2,200 until we get there. If we slice past that in a straight line, then you need to wait for 1,800. So those are your two levels. If we break 1,800, I think money will be the last thing on your mind because the world will end. So just keep that in mind. Yes, this will be on Instagram for viewing for 24 hours, just a heads up. So technically speaking, 2,200 is the lows of 2018, which we could see here. December lows, actually 2,300, sorry. 2,300 is the lows. Sorry, 2,300. 2,300 is the low. And then 1,800 is your next level. If we break 1,800, guys, I think money's the last thing on your mind because everything will go to hell. So maybe your dollars will make a difference. 2,300 is the next level. We may hit that tomorrow. We may hit that next week. We may hit that in a month from now. But that's the next level. And the way this accelerated here, guys, we were as high as 33.97 to 24.36. Wow, that's pretty crazy. And we'll leave it at that. So that's my charting. So and again, we have our levels, 2,300 and 1,800. Okay. I just wanted to chart that. That's all. Okay, let's talk about some stocks here. The Dow Jones today fell about 10%. We know that. NASDAQ fell about 9.43%. And S&P fell about 9.5%. Pretty ugly, right? So what do? Do you panic? Do you sell anything? Okay. So I'm going to go ahead and speak about what to do if you're an investor right now. So I'm going to break down for you economically. So just hold on the questions, please. Hold on the questions. I'm going to start answering questions here in a bit. So time out. Hold off the questions if you don't mind. I'm going to answer every single question, rapid fire as always, just the way you like it. Okay, what is going on in the market? Okay, investor. If you're an investor, put your investor hats on. You have your stocks. You're looking at your 401k. You're looking at your portfolio and you're seeing death. You're seeing blood, right? Oh my God, the world's ending. It's not. Recession is coming. We know this. Stocks just don't go up. We know this. Okay, you don't do anything. You sit on your hands. Nothing. You wait for things to bottom out. Sometimes the worst things in the world that happen to us, we just have to wait it out. Time heals all. Breakups happens. Death in the family, life goes on. Investments go down, they come back up. Life happens, guys. It sucks. I know right now, I look at my portfolio, I lost about $6,000. Today, I'll actually show you if you want, if you really want to see death. It's right here. You can see it ugly. Can you see it? Yeah, right there, red. Pretty ugly, $5,000. $5,000 lost. Right there in the air today, $5,000 in that portfolio. Happens. I know it's pretty blurry, I'm sorry guys, it's the best I could do. Anyways, so I understand right now you're freaking out. If you are young right now, you're young, nothing has changed. If you're under the age of 40, you have nothing to worry about. If you're under the age of 40, you keep doing what you're doing. You keep automatic investing like I talked about in our personal finance course. You stick to what you do. Nothing has changed. If you're under the age of 40, if you are over the age of 40, you need to allocate correctly. You need to start looking at bonds again and start buying some and you need to pay a little defense. If you're over the age of 60 and watching this, I really hope you are allocated correctly because you're getting close to retirement and you need to pay a lot of defense, gold and bonds. The personal finance course is free on Udemy, guys. It's free. Just so you know, it's free there. Okay, if you're an investor, nothing to worry about here. It's gonna take time. We're going to get worse. It's going to fall. And you want it like a bandage. You just want to rip off the bandage and be done with it. So with that being said, you just want to go over it and be like, oh, okay, you know what? Give me death already. I'm done. Get me to 1800. The faster we get to 1800 is the faster we can bounce, right? So keep in mind, a recession is really just a transfer of money from the people who tried to act rich to those who are a little less rich. If you are patient, you will be less rich for a little bit, and then you'll be richer later. 2009, we saw this wealth transfer from people who got out of stocks to people who stayed in. So you want to be in the right side. Don't sell because you have to. Sell because you want to. Always. That's the key. So right now, with this thing's going down, that's the last thing you want to do. You don't want to sell anything here. You want to hold on, stay where you are. I will answer the questions in a bit, each one of you, I promise. So just hold on. Economically, why are stocks falling? We are having a liquidity issue. A lot of people bought stocks on margin. What does that mean? They bought on borrowed money. If the assets go down, they have to cover with cash. What are you going to do when you have a portfolio with margin and you have a margin call? Well, you're going to sell the assets that have performed the best. What has performed the best lately? Bitcoin, gold, bonds. Why do you think these three fell? Bitcoin didn't fall because Bitcoin sucks. Gold didn't fall because gold sucks. And bonds didn't fall because bonds suck, even though bonds came up a little bit. It's because they gained so much that people wanted to take profit from it to raise cash. It's forced selling, forced liquidation. So keep in mind, forced selling happens. Always happens. It's forced selling. Does that mean Apple is worth less today? No. Does it mean that Microsoft is worth less today? Is it worth 9% less today than it was yesterday? No. Again, this is forced selling. When you have so many people pile on to ETFs and passive income and passive investing, ETFs have all these stocks in there. They're all correlated in a point. They're in a pool. So guess what? When you have pooled stocks and mutual funds and ETFs and they sell off, those stocks will sell off with it. They'll take a hit. So we're in a point now in this market. We have three prongs, three issues. The stock market was still overvalued beforehand. Just keep in mind. The problem is where else are you going to put your money? Bonds were still yielding low. The bond market was actually the beginning part of this downturn. Bond yields were too low. It was too low. That was signaling something wrong with the stock market. PE ratios, you didn't have the growth there in order to show that valuation. PE, which is price to earnings, is the correct way to value a stock, not the stock price. I don't care if Tesla says it's 700. It may not be worth 700. For all you know, you don't know what the earnings are going to be next quarter. You don't know if Boeing's going to have earnings next quarter. So we don't know if they're cheap. If anything, stocks may have gotten more expensive relative to their earnings. So you need to understand that. What is value to you? How can I value something when I don't know how much their earnings? I don't know if Boeing's going to make another airplane that people are going to buy. I don't know if Apple's going to go ahead and ship more iPhones. More than likely they will. I don't know if Microsoft's going to close that deal with the Pentagon with the Jedi project for the cloud system. We don't know that. Those are your fundamentals. So PE, price to earnings ratio, is the proper way to price a stock. When we don't know what earnings are, when Microsoft and Apple threw out their earnings guidance, you're pretty much throwing a dart in the board. So what we have with stocks is the unknown. We don't know what's going to happen. We don't know their earnings until April. So we're in March 14th, March 13th or 12th, March 12th, and we're just waiting to see if these companies have even made money. We don't know yet. So right now we're in a point of just, we don't know what the hell's going to happen. NBA's canceled games. March Madness is done, women's and men's. MLS is canceled the season for 30 days. NHL is canceled. That's billions of dollars that's missing from concessions, ticket sales, taxis, Ubers, flights. That's all coming together, guys. It's all coming together. So that's the first prong, was the bond yields. Bond yields were signaling a problem. If the economy was so good, why would people buy bonds? When the economy is good, interest rates go up. So keep in mind, that's the first prong. The second prong, obviously, has been earnings slowing. Earnings slowing, we've seen the earnings slow. We have some gains, but when these companies made money, it's not reflective based on their stock price. So remember, what these companies have been doing is borrowing money very cheaply and taking their profit and buying back their stock, which reduces the supply, and the demand is still there, the stock price goes up. That's the problem. Look at Macy's, for example. Look at Carnival, Norwegian Cruise Line. What do they do with their money? They bought back their stupid stock, and now it's worth a lot less than they paid for it. That's what hurts. So all of these sporting events, right, all this stuff, right, we weren't prepared for that. That's the third prong. The second prong has been earnings slowing. Number one, bond yields. Number two, earnings slowing. Number three, coronavirus. We know the drill. Coronavirus has made everyone freak out. So we don't know if we're even leaving the house. You don't know what's going to happen. You may not even go to work tomorrow. You may work from home. And if you don't work from home, you're not going to go to Starbucks and get that cup of coffee. You're not going to go to McDonald's or Subway to eat. You're definitely not going to use gas to pump gas in your car. You're not going to use the Uber if you take Uber. I mean, yeah, you're all over the place. So you're like, what do I do? If they close down the restaurants, if they close down the bars, if they close down the clubs, if they close down the movie theaters, anything with a large gathering, sporting events, concerts, all that, forget it. You don't know what's gonna happen. That's an economic effect. If the airports no one's in the airports, again, the issue is not coronavirus. Obviously the virus, we care about other people, yes, but the economic impact, people are not really reverberating. It's all connected. If you don't spend money, the economy is not gonna grow. We're gonna hit a grinding halt. And the Fed can do what? They can throw all the money they want. But them putting $500 billion, is that gonna make you buy a car at the dealership? Is that gonna make you go on vacation? No. Is that gonna make you go to the store and buy whatever the hell, the new Jordans? No, it doesn't. So more events are closing. That's concessions, that's tickets, that's flights, that's everything. Who's gonna pay those concession workers? Who's gonna pay those janitors? What about TV? Advertising goes down because there's nothing to show on TV. What then? What do you do? And the fourth prong, and I forgot, there's a fourth prong, is oil. Oil, guys, I know everyone wants cheap oil, and I understand. We want cheap oil, so we have cheap gas. Well, we have more efficient vehicles now. But either way, if oil goes down, you need to understand these companies, oil drillers, shale refiners, all of these shale drillers, guess what? These guys are highly levered, tons of debt. If they're not making money, they can't make debt payments. Take a look at HYG, the high yield credit market. If their interest rates go up, if the spread between high yield and investment grade goes up and spreads wide, you can't borrow money. We're in a world of credit. If you can't borrow money, you can't make payroll. If you work for the oil driller, guess what? When you're drilling, they're gonna lay you off. What if you live in Port Arthur, Texas? What if you live in Conroe, Texas? What if you live in California? What if you live in North Dakota, Montana, where you drill oil and you get laid off? You're not gonna frequent the bar, you're not gonna frequent the restaurants, you're not gonna go out to eat, you're not gonna go out to the movies, you're not gonna do anything. You are staying put at home. That helps nobody. 70% of the economy, guys, is consumer spending. And think of your friend's mother, your friend's grandmother, that doesn't know anything about economics. And she sees on the nightly news every day, the Dow's down 2,000, the Dow's down 1,000, S&P's this, red. What happens? Guys, what happens? Confidence goes down. The stock market, guys, is not the economy, but it is the scoreboard of the economy. It is the scoreboard. If you see the score is down, you're gonna get worried because you're thinking to yourself, my portfolio, that confidence goes down. But when we're at all-time highs, everyone's gonna go vacationing, everyone's gonna go shopping, you feel great. But if you see Dow red, the Dow is down 23% from its peak, you're gonna freak out and you'll be like, man, maybe I shouldn't go out to eat. Maybe I shouldn't go on vacation. I'm not gonna take my kids to Disney. I'm not gonna buy those sneakers. I'm not gonna buy that watch. I'm not gonna go ahead and trade my car in. I'm gonna stick to where I'm at. So what this happens perpetually, it creates a compound effect, a chain reaction in the market, which includes forced selling. And it creates that still movement back and forth where everyone, it's just a cash crunch and it's a mess. Okay, that's the forefront macroeconomics. What do you do? Now what do you do, right? It's easy to say all this stuff with economics and that's great, Carlos. What the hell does that mean to me? What do I do? You don't have to worry. Number one thing right now, if you're watching this, I want you to stack cash. I don't want you buying stocks until 2,300 or 1,800. You do not buy the dip right now. Just because it has a nice little ring to it, it doesn't mean anything. You wait for 2,300, you put a little bit on the stocks that you want. I'll go over the stocks here in a second. And then at 1,800, which would be the bottom in my opinion, I think that's the bottom. The capitulation bottom would be 1,800. Then you can start buying some more. But you leg in. So what I want you to do for homework, everyone that's watching, that's 316 people, you're gonna write down 5 stocks that you've always liked, 5 names that you've liked, that you've always wanted to buy into, and say, man, I've always wanted to buy Disney at 97. I've always wanted to buy Microsoft at 120. I wanted to buy Apple at 200. Keep in mind, you're going shopping in your head. You're writing down everything you want to buy, but you don't buy in now. You stick to cash. So what I would recommend, since you're probably not going out anyways, I would kind of hold off on any kind of big ticket items. Just hold off a little bit, save some cash. Don't try to be too speculative and call a bottom. I had a friend of mine who bought USO because he thought oil would bounce and he got crushed. Don't try to catch a bottom. Again, stick to the 5 names that you want. So let's make a 5 names together. Verizon, no one's gonna disconnect their phone. That's the last thing you're gonna cut is your cell phone. So Verizon or AT&T, pick one or the other, both dividend yields. Number 3, you can go ahead and take a look at a Procter & Gamble. In a recession, guys, people are still gonna shave. People are gonna still use shampoo. You're gonna use toothpaste. You're gonna use a toothbrush. You're still gonna use soap. So that's Procter & Gamble. Next one, number 3. What else would not go down? Microsoft. Microsoft has no exposure in China. It's all cloud. They pay a dividend. They have done relatively well. That's a name I would stick into. Number 4, a good dividend name. People are still going to drink Coke, Coca-Cola. Coca-Cola would be great to invest in. Coca-Cola has a dividend. Coca-Cola or PepsiCo. They're great. Stick to those names. Big cap names that have great balance sheets. Another one, in my opinion, that's not going to go away, but with consumer spending, you may want to be a little careful. Visa would be pretty great. But remember, I'm seeing some names here. So Visa is another one too, and Visa I've been waiting to go down. Johnson & Johnson's a good one. Walmart's pretty good. So I'm going to go ahead and name the names that I like. Verizon or AT&T, we'll put that on telecom. Number 2, we'll put Procter & Gamble, which is consumer staples. PepsiCo or Coca-Cola, we'll add that there. Number 4, we're going to go ahead and I'm going to add Microsoft. And number 5, the last one, was I think I had the other one I had in my top of my head. Not J&J. Damn, I totally forgot it. Like I totally went blank. Costco. Costco is good. Costco or Walmart are good. Those are 2 great ones. Again, no matter what, you're always going to go to Costco. No matter what, you're still going to go to Walmart, no matter what happens. So there you go. So again, you want to stick to where you know that are going to last through the tough times. So again, now you're probably asking yourself, why is Tesla, Virgin Galactic, CGC, all of these momentum, Roku, why are they all down? Again, people are trying to raise cash. Everything that's speculative, that's higher growth in the future, they're all going to take a hit right now because they're all taking their profit. They're trying to raise cash. It doesn't mean Roku is less of a good earner. They had a great conference call. It doesn't mean that we'll never go to space with Virgin Galactic. We will. Doesn't mean Tesla stopped making cars. They're fine. So that's if you're an investor. 2,300 is my level and 1,800. Options trading. Put options are great insurance and you could trade them. You can make money in a red market like we've been doing today. Now, I've been a little more conservative with my guys. We had some puts yesterday, but we don't know what the hell Trump's going to say or what the Fed's going to do. So we've really kind of done day to day. So if you do kind of want to day trade options, you have less than 25K, go to TD Ameritrade, get a tier 2 cash account like my 10K challenge does. And I can actually show you 10K challenge. 10K challenge, take a look at it. Here's the trades that we have, all legit, all real. We're up 3.21%. I know, not a lot, since Wednesday. We just started yesterday. So we're up. We started with 10 grand. We're at 10,321. Now here's the deal, guys. I'm going to go ahead and make this not private. Okay. So you see here, when you have a cash account, when you close an account, it takes a day for that money to be available. So that's why it says option buying power 8,000. When you have margin, it's available immediately because you're borrowed money. But this is a cash account. There is no margin, see? And it's 10,321, so we're up $321 profit. with commissions and fees. Commission is 65 cents. Well, both ways. Just a heads up. So this is options trading. These are all puts. You can see puts. It's the only one I did a call one was what did I do a call in? That was SPY. I got out of that. I tried to do an overnight SPY and I went to hell. I salvaged $11. But yeah, so there you go. See, all legit. That's a 10K challenge account. That's a legit cash account, tier 2, only 10,000. You can only put 5,000 if you want. But again, we did it for our members. So I'm trying to show them that you don't need to be a gambler and to make money in this market. You really don't. 40% rule, get out at 40%, leave a runner. And our goal was 150 a day profit. And we're actually on track. 150 a day profit, 750 a week, $3,000 a month. You can do the yourself. Just stick to what we do. If you're a Signal member, just follow the trades. I actually say 10K challenge trade, which is the Signal. And that works. Again, it keeps you disciplined. It keeps you sticking to the plan, and it prevents you from gambling. Once you hit 150, you are done for the day. Once you hit 750 for the week, you're done for the week. If you have $3,000 for the month, you're done. That's it. So there you go. Okay, and that's options. Put options are great. You can actually short the market all the way down to around 2,300 to 1,800, whatever. But again, there we go. So I want to kind of get that out of the way and give you guys an explanation of why the things are happening and going from there. Okay, so let's answer some questions. Lena asks, what he said in the beginning is our levels 2,300 and 2,200, 1,800 bottom. At 2,200 level, you may nibble on some stocks. Yes, 2,300 is the 2018 level. 2,300 is the level. I'll start nibbling some more in 1,800. Dilrod asks, how smart prepare for recession financially outside of stocks? Best bet, guys, stay out of debt, have cash on hand, and make sure you have a budget. Are you still offering Signal courses? Yes, we do. How low do you expect Boeing to tank further? Boeing's gonna fall a little more, guys. Let me go ahead and look at my charts and I can take a look with it. With this kind of move, you can almost throw technicals out the window. It's pretty brutal. Just for the simple fact that momentum is pushing to the downside. So I'm gonna go ahead and bring up a chart. Bear with me a second and I'll take a look with you. Let me go ahead. So let's see. Okay, Boeing, I'm gonna bring up a weekly chart and we'll see. Okay, Boeing has sliced through a 3-year support level of 172.46. That's pretty bad. Jesus, that's really bad. I would not want to catch a falling knife on Boeing. I'm gonna go ahead and expand it on TradingView, which gives me a little more leeway on the stock. And of course I can't open it. Boeing, come on. Oh, come on. I'm trying to find it on here we go. So Boeing, this is a 20-year chart. Oops, 20-year chart. And you can see it here, Boeing 20-year chart. I'm gonna move it to the side. Boeing 20-year chart, very ugly. The next support level, if you wanted to go there, is right around $105. That's the 2013, actually $102. That'd be the 2016 low. And you can possibly get a little lower down to around $27. God help us all. Boeing is in trouble if that happens. They're a very cash flow heavy company. They have a pretty decent balance sheet, but if no one's buying their planes, they're in trouble. So just understand that. Can I save this live? I don't know how to save a live, so I don't know. I'm sorry. Can you buy and sell puts in a vertical spread? No, we don't sell puts. We just buy them. Short the S&P 500. Yeah, that's a pretty good idea. Just be careful with your margins and everything. Thoughts on Sirius XM stock? That's the first thing people are going to cut off in a recession. Paid for radio. Get out of that. What do you mean by 18 and 2300? That's the levels to watch for in the S&P. What are your thoughts about Exxon and Boeing long term? Stay away from them. I made $3 on SPY puts this week and cost the economy. Well, there you go. We're here to make money, not boost the economy. Thoughts on Enbridge, gas, and waste management? Anything gas that has the word gas or fuel or energy in the name, you want to stay the hell away from. You're a legend. No, you're a legend. Can you save the life for us? I don't know how to save a life. What's your call in the market? Lower. Puts on SPY? Yes. What to short? SPY, IWM, QQQ. How does the Fed spit out so much money? Where does it come from? The air. Where else? They just put some pieces of paper with pictures on it. Nothing. Futures red by Royal Caribbean up after hour. That's probably short covering. We're going to be red again. Any freebie play? I obviously haven't had time to even do a freebie play because I've been so focused on my guys. I'm very sorry. If things stabilize, we'll see what we can do. Our taxes, airlines long term. No, I did nibble some DAL and I'm red on it, but I'm holding it long term. I don't know how to save this live, guys, unless you can tell me how to do it. Disney closed California Park until the end of the month. Yep, they're in trouble. VIX calls. We don't trade the VIX. Should I short S&P? I already answered it. I don't know how to save it, guys. If you know how to save a live, let me know. Chari, please. I don't know what that means. What needs to hit 1800? S&P. BA will hit break 125 in this climate. That may not be too far out. What do you think the VIX will do? God knows. It could probably hit 100. BA is falling like ash, right? S&P 500 buying at 2300 can go as 1800. It could. That's why you don't go all in. That's why you level in slightly. So one, just hold Boeing if they bought at 316. Wow, if you bought Boeing at 316, I feel kind of bad. Do you need the money? If you need the money, close it. If you're okay with just holding it long term, just own it. Just keep it. Well, it doesn't need to be, but if it does, rock bottom. Should gold and silver be constant monthly, weekly investments? Some of it, not all of it. Not all of it. Your opinion on crypto, short term, long term. I still own crypto long term. Bitcoin, I still buy some every week. That has not changed. What stockbroker to recommend? TD Ameritrade. Enbridge and Waste Management. I don't know what Enbridge is. Is it good to buy 2022 cruise line airline calls? No. Do I wear cologne? Yes. Important things you learn at working at Citibank. I mean, most of it's just banking. Is it good to buy cruise stocks 2020? No. Books or YouTube tutorials for beginners? You can take a look at our YouTube channel. Books, I think I posted it on highlights. Do you think US will suspend shorting the market? That'll never happen. FB, Diz, Amazon, Square, Twitter. They're all good long term. Why not sell your portfolio and buy at 2300 levels? Because A, I don't want to pay taxes on my profit. Hello. And B, I'm a long-term holder, not a trader for my stocks. How can we do day trading if we don't have 25K? Tier 2 cash account, TD Ameritrade. Tier 2 cash account, TD Ameritrade, and you're fine. Buying Bitcoin UNH, I own UNH and I still buy Bitcoin. At the end, you save the left corner. Okay. How do you value stock by P&E? Okay, so you base it based on the current market multiple, which I believe right now, I'll go and look it up, which it may not be accurate because we don't know what we have in regards to earnings. So I'll go ahead and look at S&P 500 PE ratio. So this may not be correct. Right now, the PE ratio is 15. No, actually 18. 18 right now is the PE ratio on the S&P. So anything above that is considered expensive. Anything below that is considered cheap. Thoughts on Tesla? I like it long term and I own it. But banks, I don't know about but banks. Puts on Uber and Lyft on the potential close down. I mean, if they have options volume, sure. What do you think about Apple? Love it long term. Space put, should I sell them tomorrow? It may go a little lower, so if you see profit, you take it. Short Diz, what level do you think they will fall to? Disney, I need to take a look at it. I have not. I've been shorting all day on IWMQs, Microsoft, all that jazz today. Disney just broke support on the 3-year. So in order to bring this up, I'd have to expand it again on the 1 month chart. Disney is literally right at support at around 92. The next level down, which would be maybe what? I don't even know this. 300-day moving average is $72. If they close in the parks, it could be a good short. But again, I like it long term and I own it. Robinhood or another stockbroker? Stay the hell from Robinhood. Stay the hell away. TD Ameritrade. With this volatility, it puts more expensive. Yes, they're more expensive because more people are piling on puts, meaning the demand is higher. So be very careful. What's the cost of getting your group? It's $200 a month for premium, $100 a month for basic. Stay away from cruises, guys. Don't get cute. Stay away. Thoughts on Disney? Love it long term. Waste Management is a good stock to own long term. Thoughts on tomorrow? We're going to go down more. It's going to be Friday the 13th. It's going to get ugly. You think GLD will fall more? I think it could get a little lower on GLD if I bring up GLD now. GLD 1 hour chart is bouncing right on 147 on the 1 hour. If it's honestly expired for tomorrow, you want to close it. If it's a longer term, you may want to hold it. Thoughts on ITA? I don't know what ITA means. Disney closed California Park. Yes, I know. Cruise stocks, stay away. Thoughts on crypto on long term? Did I answer these? Yeah, 2300. Guys, let's find directions for him to make love live. What do you think about the Fed did today? Crap. They don't know what they're doing. And they had to, but didn't do anything. Someone said to click on the left in the position to save the snipe. Okay, I'll do that. Thoughts on Alibaba? I like it long term. Let's see. Oh, when you click live and wait, it should give you an option to save it and post in the story timeline. Oh, nice. Other than Robinhood, what other brokers recommend TD Ameritrade? When you end the live, it will give you an option to save your story. Okay, at the end, live, save left. Great. Well, you guys are the best. So I'm gonna scroll all the way down. I'm missing a lot of stuff. I don't know what AMRN is. What swing trade do you plan on doing tomorrow? Just puts, SPY, IWM. We'll see what we get. Is there any news that investors will take as good news? Yeah, some massive stimulus package. Some massive stimulus package from the Fed. If SPX tests 2,300 and bounce, what level would you think is time to buy upwards? I would say right around 2,400. Interactive Brokers is good. Are you down on my long-term portfolio? Yeah, I'm long on my long-term portfolio, of course. Apple down 220 in the next 2 weeks. Apple has a little more to go. 220 sounds like a good level. You said S&P, yes. 220 election will get canceled? No, we had an election during the Civil War. We'll have an election during this shit. Buy the dip on GILD. Yeah, Gilligan's fine. This is a day trader's market. My puts are getting killed, but my calls are getting crushed. Makes no sense. Can you talk more about this 2,300 level and 1,800? That's just the S&P level, guys. 2,300 is the first level of support. The next one is 1,800. Sound like Bernie was right. I lost 20,000 in S&P and bonds. What should I do? Sell? I don't know your investment strategy, so that's really up to you. Do you have a tutorial on how to buy puts the right way? Yes. G.A.R Capital Trading.com. Thoughts on penny stocks? Stay the hell away. I see the word penny stocks, get away. Should we buy tomorrow? No. Should we hold options for the weekend? If you have puts, I'm not against it. I'm on MLPQ. I don't know what that is. All right, guys, we're going to end it here. It's been here for about half an hour. I'll try to help you guys out, so as much as I can. If you want another live, let me know. I'll go ahead and put a poll for tomorrow so we can kind of go over the week. You said 2,200. No, it's 2,300. I'm sorry, 2,300. Will AMD be up by 2021? Who knows? What if I only have $250? Save your money. AMR, I have to look at it. Okay, I will. All right, guys, we'll leave it there. GARcapitalFX.com. I'll go ahead and probably do a live tomorrow, and we'll go over everything. It's been a wild ride. And guys, nothing to fear. This is just basically a recession we're getting into. And if you lived through 2008, this is kind of the same thing. And again, we bounced back on 2008. We'll bounce from this again. Most recessions last about 18 months. If you're an investor for longer than 5 years, you have nothing to worry about. It's gonna hurt a little bit. It's like a breakup. It's gonna hurt. You're gonna have romantic love songs stuck in your head all day, and you're gonna be crying and you're gonna be sad. But guess what? You'll meet someone else meeting a bull market, and you're gonna feel a lot better about yourself. Okay? So don't feel too bad. I'll go ahead and save this, guys. And if you're a trader, this is put season, all put season. And I hope GroupMe works tomorrow. So me too. We'll work on something. I'm talking to my tech guys. Have a great day, guys. If you play Call of Duty, King Lowe's 007 is my name on Call of Duty. I don't have my controller, but I do play Call of Duty. So let me know. King Lowe's 007. The new, I forget that new ground war thing. I like it. Let me know if you guys want to play. I would love to play with you guys. Xbox, King Lowe's 007. KINGLOS 007 on Xbox for Call of Duty Modern Warfare. That new game, whatever it's called. But it has crossplay. So awesome. I'll probably do a live again tomorrow, guys. So get those questions for me. Your homework is 5 stocks that you are really interested in buying. 5 stocks you really wanted to buy for the next downturn so you can start legging in long term. Have a good one, guys. Enjoy. GARcapitalFX.com. Thank you so much for your time, and I'll help you out tomorrow with more questions. Enjoy.